Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the market. That is the stock market, the crypto market, the oil market, of course, one of the most volatile markets around at the moment. Some unforeseen events taking place in the markets over the last 24 hours. We'll get into it and more. We've got Bitcoin strong back up to 71K as the S&P ends up closing up yesterday. We'll get into why that is the case. A lot of major moves, a lot of concerns around the Middle East, but then also Trump coming out to try to allay fears. Legendary will break that down in a bit, along with the oil swing, 30% in a day, back to $85 after it spiked up to around 115, 120. Just crazy moves on such a big market. We'll talk about that as well as talking Nasdaq announcing partnership with Kraken in plan for 24/7 tokenized stock trading. We've been touching on that a lot. We'll also talk about Hyperliquid, which is, I guess, the place where a lot of this 24/7 trading has been taking place already, being up 10%. So I want to talk about that too. And delighted to say we're going to be joined by Zeneca, very, very prominent trader, thinker, ex-poker player, and friend of the show who we've had on before. We're going to be interviewing him today to get his thoughts on the market, as well as explore some of the very cool things he's been building on the intersection of crypto and AI. So I can't wait to have that conversation towards the end of today's show. So stay tuned for that. In the meantime, I've got Legendary in the co-host seat with me. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is incredibly risky. We do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Tuesday. It is the 10th of March. How are you doing? How are you feeling?
GM. I'm doing quite well. I liked yesterday's show quite a lot because we both arrived to a conclusion that we are not oil traders and we are watching this from a trading perspective for the first time in our lives. And we did not enter an oil trade yesterday. Obviously, there would have been a very attractive trade to short the thing, but I had no idea that oil can crash as much as it did in basically in a few hours. I had no idea that we're gonna see this volatility. So I feel very chill that I looked at the charts and I didn't do anything to do with oil. And as a result of like not having panic sold to crypto or anything else, I'm looking at a green day in the portfolio by doing nothing, and it's a beautiful feeling.
I mean, this is just the type of market we're in, right? And that's why I'm so set on this concept of getting out of the way. When people are fighting, whether it's Jeff from Hyperliquid and CZ, whether it's the IRGC and the GCC, you just get out of the way. And maybe you pick your spots where you think you have a better idea of something. But look, here's an example for me, Ledge. You mentioned your portfolio being green, I guess, because the stock market ended green and you've got decent exposure there. I told you I was short NVIDIA over the weekend and into yesterday. I said that on the show. And I think it opened, when we opened up, it was low, right? I was up, maybe I was short from 182. It went as low as 173. Maybe it was around 175. And I was thinking, okay, well, I don't think the situation is getting any better. I think the situation could get worse. But then I was also thinking, but after we spoke on the show, it was just like, well, how this is just so volatile. It's so unbelievably volatile. I think oil was still pretty high at that time. And it started edging up already. Like it had started to creep up back towards the position I'd entered in. And I was like, I don't think I need this position. Like, I don't think you can trust. There's too many factors, which I don't know, too many people, stakeholders, players in the game that are confusing the markets. And I don't think I need to hold this. So I sold it. I took, and which is good because I had recently taken some losses on the perp account. And so I sold this one and I was in the green, and you just take your win. And then, as you said, the markets ended green in the end because I think, at least in part, maybe you'll talk about this more later, Trump, I mean, very, very conflicting messages coming out of Trump. Did you see the variety of stuff he was saying yesterday?
Yeah, ranging from the war is going to be over very soon to if the Strait of Hormuz isn't clear for ship to pass, he's going to attack them 20 times harder than he did before.
Did you see the thing where I'm pretty sure someone asked? I don't think I'm making this up, but honestly, there's so many clips going around, it's hard to know. Did you see the thing where someone asked, "Well, you've said it's going to be over soon, but you've also said it might be longer. Which one is it?" And he said, "Maybe both." Did that clip exist, or have I made that up? Was that real?
I didn't see that. The most entertaining one I saw yesterday that was real was him talking about sinking Iranian ship,
Oh my god.
and why they haven't been capturing them instead. And his remark on that was that it's more fun to sink them.
Gosh, that is insane. That is wild.
Added to save that statement that it's also like safer to sink them, but like the initial thing was, oh, it's more fun to sink them.
Absolutely wild behavior. I mean, I think that feeds into this concept that we spoke about the other day, right? When you look at the way, I mean, Percy, I know what you mean. That like all of this is funny through one lens, right? But then obviously there's another lens where you look at this stuff where it's kind of shocking.
Yeah, of course.
That all of this stuff can be spoken about in this way. But you see that trajectory of the way people talk about stuff now when we talk about the White House account, like whatever intern is in charge of that account, the whole thing's being presented like it's a video game that everyone's on. And you should be excited by every kill. You should be excited by every sinking. And I mean, who knows? Maybe that's the way to get your country behind it, especially a country that I don't think is behind this at all. I think there's a lot of opposition to this general conflict, not only in the United States, definitely in Europe, and around the world. So there is something very vulgar about how the reduction of these conflicts into video game style animations to to get engagement. It's both comical and incredibly depressing.
I would have said it's both horrible and incredibly smart because, as you said, like people don't necessarily want this war, and they don't want to think about like actually people. You know, if people get bombed, people die. You have a ton of people dying on the Iranian sides. You have civilians dying. You have this investigation now into the school that has been bombed, and what it seems like it has been bombed by the US. And Trump did admit on that whatever outcome's going to come from that, he's gonna deal with it. Basically, is what he said. He did comment on that as well. And you have a country that is facing midterms soon, and you have a country that probably is not super happy about all of the military action that is happening at large. And what a like equally smart and horrible way to turn this into hype video game footage, to have the GTA 6, the Call of Duty edits, to like basically abstract the layer that is actually real humans killing real humans, and make it look like a fun game, and have statements like, it's more fun to sink the ship. It's all also gamified, and it probably works. That's the wild thing about it.
Yeah, I mean, I think it gets the engagement, right? It's like I think there is an aspect to this administration, although I'm sure many other administrations, after seeing the success of it, will copy it, of turning everything into reality TV. I think it actually suggests the devolution of all administrations, and like there would have been a time where people would have thought that this type of content or this type of engagement farming from a respectable institution would be maybe without class. It's not becoming of reputable people to produce content in these specific ways, because there should be some amount of class in the way that they conduct themselves. And I think I don't know, it's kind of like Love Island for presidency, it's you take you take some base the base instincts of people, and now you're just kind of tapping into it on the highest level. And as you said, maybe in some ways it's pretty successful, and it gets people engaged, certainly gets people engaging with it. So let's see. We're going to talk about it as it relates to market. Of course, today we try and get a handle on what's going on. My instinct is maybe things are looking up, or at least that's what the messaging has been. Maybe some movement around the Strait of Hormuz. We'll get into what Trump specifically said today. Legendary will break that down. And then we'll talk more broadly about crypto, which, if you actually think about it, is demonstrating unbelievable strength here. Unbelievable strength over the last 7 days as well. So we'll get into that. And as I said, we've got a good conversation with Zeneca coming up towards the end of today's show, discussing what he's been building on the intersection of crypto and AI and his general thoughts on the market as well. So looking forward to that. But right, let's get into it. To get into the main price action, to get you up to speed, what you need to know. As I said, crypto demonstrating awesome strength. Bitcoin is up 5% to $70,600. We've got ETH up 3%, just back over 2K. A little bit underwhelming, but okay, better to have a 2 in front of it than a 1. XRP is up 4% to $1.40. Sol is up almost 4% to $87. And as we said, which we'll touch on in more detail, Hyperliquid is up 12% to almost $35. HIP3 volumes going through the roof. I think another all-time high over the weekend with all this oil trading. Getting into the more meme coin side of things, we've got Doge up 5%, we've got Pepe up 4%. Bonk is up 5%, Pengu's up 7%, Pippin's up 10%. So the usual suspects are up a few percent on this generally green day. That's what I would have to say there. And getting into the main headlines, as I said, we'll talk Bitcoin being strong up to as high as 71K. S&P closed up as well. Oil swings 30% in one day back to $85. And Nasdaq announces a partnership with Kraken in plan for 24/7 to tokenize stock trading. So those are the three things we'll talk about today. We'll also talk, and then just the other bits of news to get you up to speed. We've got Michael Saylor's strategy, adding another $1.2 billion of Bitcoin at around 71K average price. Cast, the payments, stablecoin payments provider, they have a card, raised $80 million at a $600 million valuation. Congrats to them. Bitminer buys another $120 million of ETH. That is Tom Lee's entity, although they're down an outrageous amount of money at the moment. Zodl raises $25 million for Zcash privacy wallet. Very interesting angels and backers there. I like one of the most highest quality group of backers there, I think. Something I want to double click on at some point. Gondi makes users whole after some of their users were affected by an NFT lending hack. And finally, Pudgy Penguins announced Pudgy World, free-to-play browser-based game that is now live. So that is the news, guys, to get you up to speed with everything that you need to know. Once again, I think majority of stuff is going to center around this oil conversation and the conflict, but there are some other interesting things going on, Ledge. So what's catching your attention before we get into that main stuff?
It is something from completely outside of the snapshot, and it's a bit of an easier topic. I feel like we have enough complicated and complex topics to discuss on the show, so I'm going to touch on this, and it's just to do with Pokemon cards. The volatility that we are seeing in that market as well right now is absolutely crazy. So what we had was the 30th birthday of the brand, and we've seen that Japanese cards especially have been exploding in price after there was a Charizard sale without a rarity symbol, which is basically the equivalent of the first edition Charizards in the English speaking or in the global market. So that had a record sale. Then we've seen cards pumping to extreme highs, and we've also seen some corrections already. Seen one particular card that had shot up to 65,000 a week ago or so is now down to 15,000. That was the Lily full art card by a very specific illustrator. So it is, on the one hand, is absolutely wild to see how much Pokemon cards have been going up, and they're still up over the perspective of the last months or so. A ton of the full art illustrations, whereas the pretend Pikachu ones or so have doubled up in price, if not even more. And then we've also seen some massive corrections down, and it's crazy to see this volatility on both ends on the Pokemon side of things, because maybe some people would have expected that there is a cooldown after the 30th birthday, and kind of were of the mind that this is a good moment for the bubble to burst. But it seems like that both things are happening at the same time, with some cards very strongly continuing to run and others who have which have corrected down already.
So what's the trend here on the Pokemon cards? Like which ones, if you were to think through your own collection, although I think maybe you're a net seller here at the moment, if you want to correct me if I'm wrong, is there one class of card that you're noticing, oh, these are the ones that are still showing strength and moving higher, whereas you want to try to avoid certain cards at the moment because they are the ones tanking for a specific reason? What's the reason why?
So on the Japanese side of things, for me, the keepers in my collection are the older ones, the like base set ones, especially the first edition no rarity symbol, because they're so hard to get. And obviously not talking about like a PSA 10 in there. Like I'm talking about maybe it's Blasters in PSA 9 or so, which is already worth, I don't know, like $5.5 or so, and went up from 3. They are the keepers for me. Then on the illustration Japanese promo side, it's like the really popular ones, whether that's the Van Gogh inspired Pikachus, the Scream Pikachus, like the ones that are really recognizable. And then on the English global market side of things, I have liked collecting everything that's like in the Wizards of the Coast era. So like also the first few years. And the newer stuff, there is obviously some great grails in there, but that's not the one I'm most familiar with. So I'm like safe betting on really popular full art illustrations in the Japanese promo market that are super, super recognizable, even to an outside crowd, or that even the crossovers, the Nintendo Pikachus, which I also have, and then the really old stuff, both in the global and Japanese market for me.
Okay, so it seems like a general take would be older stuff is better. I mean, I know you explained in more nuance, but the older stuff is better. Maybe the newer stuff is something you're willing to let go of sooner. Okay, let's get. I want to share this other thing before we get into the main headlines today. This is the news that the Cluely CEO. I don't know if you saw this, Roy Lee. Roy Lee is one of the most. How would you describe him? Certainly one of the most controversial young CEOs who has got a lot of attention for his product without necessarily having a lot of product market fit, I think would be fair.
Step back and educate me what Cluely is.
So to be honest, I don't know. Clearly really got really viral because they had this product which kind of suggested that you could cheat in life. Like you could have this overlay as you're having conversations. The information in their Twitter handle is every conversation can use a little more intelligence. And the big advertisement that went viral was that someone was sitting on a date and someone was asking them questions, and they had all of these answers to the questions which they would not have had without Cluely like running as an overlay on for them. So I guess it's this like hybrid human intelligence layer that you can augment yourself to improve in some way. But the thing that they've got so much better, the thing that they're so much better than everyone else is just the attention market. And they got called out. I think for the older people, Roy Lee's seen as maybe like a Gen Z founder, not taking things seriously enough, not focusing on product enough, too much, focusing on the attention side. And maybe the traditional side of people look at that and say, well, where's the product? Where's the product market fit? He says they're still profitable. He says they are doing well, but he did get some numbers wrong. And so there was this article written on TechCrunch about them, suggesting that he lied about the numbers. They're not doing as well as they said. And he produced this video to respond to those allegations. I think it's probably worth watching because everyone has been watching it, seeing what has been said, and maybe this is the new way that CEOs have to respond to questions or comments about their business. Let's get this up and let's get this playing.
Let's do a quick recap of Roy Lee history. Since I left school no more than 2 semesters ago, I've gotten 2 startups to do millions of dollars in revenue each, became the most well-known face in all of technology under 25 years old, got billions of views across all social media platforms, and I hand wrote the growth playbook that every single YC startup right now is copying. We've never had a down month in Cluey history, and today we're fucking profitable. But I guess it's time for another article about Roy. Fun fact to all you techroids, did you know you guys have more mentions of Roy Lee on your site than fucking Jeffrey Epstein? I hope you guys know that you are single-handedly responsible for the biggest media cover-up in all of modern history. But I guess it's not tech news that every tech billionaire is a satanic child-eating murderer. Instead, let's write the 12th article about Roy getting his numbers fractionally wrong 2 months after he launched the product. And all the headlines make it sound like you guys dug up and caught me. No, I'm the one who reported the screenshots. I'm the one who uploaded it because I was trying to be more transparent than 99% of the founders on this entire fucking platform and own up to the one time I was actually a little bit off. Because I really am on the ground every fucking day trying to build something generational, and I'm doing it more publicly than every single one of you watching this video has ever had to. If I wanted to make a few mil and walked away, I would have launched the coin 6 fucking months ago. But I didn't, and I never would, because I'm really not trying to fucking scam people. I really am working my ass off to build something great. And I don't care if every single person thinks my strategy is wrong, because in 10 fucking years, when the market cap of Roy Lee is at $10 trillion, history will prove me right. Every anonymous profile picture I have in Twitter, motherfucker, could combine their micro penises into one giant hate boner against me, and it still won't stop me. Because if there's one thing about me, it's that at the end of the day, I'm never ever giving up until the day I fucking die. Okay, I think that was a good take.
What do you think, Ledge?
I'm surprised that you are the one to pick a clip like this to share in the show. It is entertaining, though.
I don't know, man. Like, I guess is this just what business is now? Like, personally, I mean, he's got 2 million views. I guess people care about that a lot, right?
I mean, Rich says it in the comments on that video. Attention is the only thing you need to build a successful startup. It's a bit of a hyperbole, but definitely it is one of the standout things, especially in a world where everyone can build almost everything with AI. If they put their minds to it, then what really remains is distribution, and you get distribution by getting attention. So that is, without knowing the context of any of this, definitely probably a very successful video.
I mean, definitely a successful video. I think there's a traditional part of my brain which wants to think that the product is important and the way that you build the company is important. I think those things are super important. If you think about a traditional company, not even just a traditional company, even a modern company, what is the founder responsible for? I think the founder is responsible for product vision, for strategy, for hiring and recruiting, getting the right people in the right places. I think all of those things are really, really important for the founder. I would just push back a little bit on this idea that every CEO has to be the founder. What do they call it now? The founder funnel. Like, you've got to be the person out there getting the attention. Like, that's not how all businesses work. It's clearly not. Like, no one knows. I don't know who the CEO of Coca-Cola is. And I definitely know he's not creating videos like this. And that works not just on the already established companies, even for smaller companies. There's many occasions where you don't know who the founder is. It's a faceless brand, and they still win because maybe they have a good social media marketing strategy. It doesn't have to be the human. So I guess even if you don't stand up there as a founder and put yourself out there and create your attention like this, sure, you have to generate the attention some way. Maybe people just really like this version of it at the moment. What do you think of that?
I mean, maybe it's easier with a traditional brand like Coca-Cola that has existed for more than a century and is a household name. But if you're a startup these days, it's probably just easier to lean into the founder's funnel. And even if I was thinking, like, think of Anduril, like, very traditional business model of being in the defense industry, and you have Lucky Palmer, who's like very, very vocal out there. And
Palmer Lucky, other way around.
Yeah, exactly. Me and names, great. But you have this guy being very active out there and like playing this founders funnel game where he probably would not need to do that, but it's just making it better. I think if you're a new startup and you don't have an established brand presence, leaning into the founders funnel is probably the easiest thing you can do. If you have, I would have said if you have a retail facing business, but Underreal is not really retail facing. Like, it's not that he's not selling his drones B2C. Even a B2B business then probably can benefit quite heavily from that founder's funnel.
Yeah, seems pretty important. Right, I thought that was entertaining at a minimum, and so, but let's get it. Let's keep moving. We've got some important headlines to talk about today as it relates to the markets. Talking Bitcoin, talking S&P, talking oil, talking Nasdaq, getting involved in 24/7 tokenized stock trading, and of course we've got great conversation that we're looking forward to have with Zeneca, a good friend of the show, long-time NFT trader, participant, and building some very cool stuff in crypto and AI now. So looking forward to get his thoughts on the market and what he's building in a moment. But let's get to the market stuff first, Ledge. What do we need to know here around Bitcoin, oil, what's going on in the world?
Yeah, let's process the last 24 hours because they've been quite intense and volatile, starting with the oil price first. Yesterday, we did report on the show that oil went as high as almost $115 a barrel, corrected down there to 100-ish. Once we had the announcement yesterday that the G7 states are considering to release oil reserves and help with the supply shock that otherwise would have happened. But later in the day, after the markets opened, and the markets did not open in a very bullish and positive mood, Trump started posting and making remarks that they are very well progressing on the timeline. They're way ahead of schedule, basically, and this war is going to be over very, very soon. To which the markets reacted. The stock markets reacted quite positively, and oil started to dump. Then he also made more reassurances regarding the Strait of Hormuz, saying that basically they will hit quote unquote Iran 20 times harder should it stop oil flow, should it not be possible for ship to pass there. And what also has happened later in that day is that the president of Saudi Aramco, Saudi's big oil company, came out and saying that they are restoring 70% of normal crude oil exports within days by going via the Red Sea port and avoiding the Strait of Hormuz to the extent that is possible. So this is what happened yesterday on the war and oil price side of things, and the markets all around the world had a quite strong, quite pronounced reaction to that. Starting maybe with the big markets that we talked about yesterday, the Korean index, the Kospi index. Yesterday we said Kospi was down 5%. Kospi is now up 5% on the day, so basically corrected all of that. Chinese markets were up as well. The Nikkei 225, the Japanese index, is up 3%. So Asian markets reacted quite positively to that. The Nasdaq closed 1.4% in the green. The S&P was up 0.84% on the day as well. And the gold price, also like that news, gold is almost back to 5.2K, is up 1.7% on the day. As an extension of that, the silver price, like the news even more, is up 5%. The one thing which did not like the news so much, or wasn't really impacted by that, is probably the more correct wording, is the US dollar index, the Dixie. For the Dixie, we have said it was pretty strong since the conflict broke out. Almost, zoom out a bit here, went as high as 99.7, but has corrected down a bit. It's still sitting relatively high, but definitely did flatline to that news yesterday. And obviously, the other thing to touch on, and you said it at the start of the show, is that the crypto markets reacted quite positively as well, with BTC going as high as 71K, now trading at $70,500. And also adding to that, which is probably helpful, is that yesterday was another day of positive inflows to the tune of $167 million in Bitcoin spot ETFs.
Good stuff. So what is your instinct saying here, Ledge?
What I said during the intro, during the opening of the show, I'm happy to not have traded oil yesterday. I'm happy to not have made any like panic decisions, like selling stocks because Asian markets are dumping, because everything basically has been reversed within a day. And it once more shows like how powerful Trump is in what he says, posts, and does. And I'm just not willing to trade this volatility on a short-term time frame at the moment. My thing still remains to continue buying the MSCI All Country World, continue buying gold, both more as long-term holds, but I'm happy to not have traded this volatility because I most certainly would have lost money doing that.
Yeah, I think that's fair. We've spoken about how one way to get exposure to all of this stuff without committing to any of the assets that are going crazy in the world at any point, at any time now, is just by buying Hyperliquid. Hype was up 11% yesterday, almost all after we spoke about it on the show, actually. Because look, what are you going to do? You're going to jump from trading the Korean stocks to oil to wheat to whatever else. Like, what do we really know about these assets? We try to move with the market, try to understand them as best as possible, but I'm not sure that we're as, I'm not sure. Well, it's not just us. No one is experts in all of the markets that are going to come on chain soon. So and this is maybe a broader point about the direction crypto is going, is if you are a trader on Hyperliquid, it's not going to mean that you're a crypto trader anymore. It's going to mean that you have at your disposal every single asset, because every single asset is coming on chain. Now the question is, do you want to trade every single asset at all times? Probably not, because the world has already had the opportunity to trade every asset all the time, and people specialize in the things that they know best. And I think people are going to have to make that decision pretty soon before they chop themselves up in markets that they don't understand very well. One thing I'm looking at here, Ledge, is the S&P over the last 6 months or so, and it's really just been in this range. Like, imagine trying to trade this chart. That you will drive yourself crazy. And I guess maybe the extension of this thought here is, I've wanted to be bearish for a long time, but I'm getting to the point where I'm starting to think that, and again, sometimes I will, maybe when you get to one of the top of these ranges, you think, okay, here might be a good time to short again. But you're starting to get to the point now where you're asking the question, what bad could happen that would make the markets go lower? This conflict is one of the biggest events possible, I think, and usually actually wars us. Markets go up, right, because they're stimulative, but it doesn't seem to want to go down on any of this uncertainty either. It went down a little bit, but not a lot. So I'm starting to think that we're just not going to get the big correction that so many people are calling for, even if there are a number of reasons why it should happen. What do you think?
Yeah, it's not going to be the conflict related one. It doesn't seem that this is the case for now. Like, even if you look at the Nasdaq, which you would probably say is the more volatile index to look at, it's been, if you zoom out over the last year, it's up 25%, but ever since October, it's been like pretty solidly defending its top and holding up quite strongly. The thing that, I mean, obviously the AI bubble bursting, but that's not a thing I see happening in the way that the .com bubble bursted. If labor data, however, keeps getting worse, and you will see more AI displacement happening, which will happen to a stronger extent at some point, and not being an AI doomer here, but I do think that then we could see a broader correction happening. But again, it's so impossible to predict how AI models will evolve and how this will be achieved, and in what timeline we might be able to see something that is AGI or close to AGI that would have this massive societal impact, because this is so unpredictable for humans. It's, again, a thing I'm not willing to bet on.
Okay. One final question on this before we hit the final headline and then get into the conversation with Zen in just a moment, is what are you attributing to crypto's strength here? Like, why Bitcoin is up 6% on the week, ETH is up 5% on the week, Hyperliquid is up almost 10% in the week. Why is this the case?
I think there's two factors here. On the one hand, like, semiconductors not only had a good day yesterday with all of them being in the green and Nvidia being up 3%, and that is certainly something that has been helpful for the crypto prices. And then on the other hand, if we look at the last, 3-4 weeks since last 3 weeks since 24th of Feb, we've basically seen, with 3 exceptions, very healthy green inflows into Bitcoin ETFs. You do have institutions buying again. You only had one day with 28 mil and then 2 days with 227 and 350 mils, 50 mil in outflows, whereas the other days were anywhere between 250 and 500 mil in inflows. So you have now institutional buying pressure that is getting stronger, and the outflows seem to have stopped. So it seems like a temporary bottom has formed for the time being. I was surprised how strong it was, given the war in Iran and how much that situation had escalated, even against the backdrop that gold had struggled quite a bit and has seen massive volatility, like ranging somewhat. But even on the 1 day chart, it's very volatile. Like over the last 7 days, we did go down from like 5.3K to 5K and now started to bounce back up. We are back at almost 5.2K. So gold did not have this like strong trajectory of showing strength amongst the Iran war, but being quite volatile. So against this backdrop, I did find Bitcoin's performance quite surprising. But if I had to explain it, I would say there's institutional buying pressure and the tech side of things doing fairly well, given everything that
the tech kind of stuff bottoming as well, right? Because Bitcoin's been correlated with software for a while now. Yeah, that's a fair take. I also wonder whether it's got something to do with the conflict and whether there are bigger entities that use Bitcoin in times like this to move money around. I did read something about Iran being involved in Bitcoin mining. I'm not 100% sure there, but I'm kind of open to that idea. Interesting stuff. I definitely am taking a lot of confidence from this. And as I said, with some of my LP gains now, I'm starting to layer into Bitcoin. Actually, I'm doing a bit of a mix now. It's like a bit of Bitcoin, a bit of gold, a bit of dollars. But I think, as I said, 67K Bitcoin is better than 127K Bitcoin. So, you got to pick your spots. Right. Final headline here before we get into the conversation with Zeneca, which is delighted to have in just a moment. This is the news that the Nasdaq is partnering with Kraken to bring tokenized equity on chain. So Nasdaq's partnered with Kraken's parent company, Payward, to build infrastructure connecting tokenized equity markets with decentralized blockchain networks. Kraken's X-Stocks framework will power the permissionless infrastructure layer, enabling tokenized equities to move between regulated markets and on-chain ecosystems. They expect the equity token design and related distributed ledger services to become operational in the first half of 2027. One question. So look, I think we already know this is the trajectory the world is going in. One thought on this is to what extent, and we already asked this question once in terms of competition with Hyperliquid when Coinbase started offering perps or some kind of increased leverage. And it ended up not being a competitor for Hyperliquid, really. Do you think these other entities have a chance? Do you think Hyperliquid gets negatively affected as this competition increases? Or do you think it's, just business as usual?
I think there is a world where Hyperliquid gets negatively impacted by that. I think that in a world where the Nasdaq, the CME, so many are pushing for their own on-chain tokenized trading venues, prediction market venues, it will just add more pressure to Hyperliquid. But at the same time, I also don't think that this is something that is killing Hyperliquid, because you still have this core of Web3 native users that have learned to trust the brand, have learned to build a ton of loyalty as a result of simply have received a massive Hyperliquid airdrop and would not have any incentive to want to switch to a Kraken-based Nasdaq tokenized stock version. So I think, yes, it's adding massive competition to them. It might be harder to then attract TradFi people wanting to onboard to the blockchain and then trade on Hyperliquid. That I do think. But at the same time, I think their user base is healthy enough, and if crypto as a user base is growing, then that will be to the benefit of Hyperliquid.
Okay. Yeah, I think the big thing for Hyperliquid to keep in mind, I've said this before as well, the biggest risk to Hyperliquid now is not that anyone comes up necessarily with a better product. I think people really, really like it as a product. I think the biggest risk is a legal one where they are entirely decentralized. Everyone else has all of these hoops to jump through. Centralized exchanges have to tick all of these boxes. Hyperliquid doesn't have to do any of them. They will say that that is very unfair. They've obviously employed someone in Washington, D.C. to lobby on their behalf now, which I think is very important. That is the biggest risk to me moving forward for Hyperliquid. It's not a product question, it's a legal question, which I'm sure people who have to jump through all the hoops will say it is not fair that you don't have to do that. That's what I would do if I was on the other side. And I think there's some element that is justified in that argument. So that's the thing I'd keep an eye out for as their competition increases. Once everyone is ready, I think that's when they would try to strike. That's with me putting my legal hat on. Look, that is an interesting question. In the meantime, obviously Hype's doing great. It's up 10% on the day, looking like one of the best crypto coins we have. But as I said, we're delighted to have Zeneca joining us on the show today. He's a longtime friend of personally and friend of the show. He has been doing all kinds of very, very cool stuff. He's a former professional poker player, turned NFT pioneer, who's now building something genuinely revolutionary, a company with an AI co-founder. Zeneca built one of the biggest educational communities in NFTs with Zen Academy and the 333 Club. Oversaw a humongous NFT portfolio at its peak in 2021 and has been writing one of the most thoughtful newsletters in crypto for years. I am tuned in and reading that each week. Now he's running an OpenClaw agent named Yoshi. They formed a company called Yoshi Zen Co. Someone launched a Yoshi token based on his tweets, and Yoshi literally has his own X account posting autonomously, including daily build logs. So today I'm excited to talk about what it's like to have an AI co-founder, the prediction model that's actually making money, the OpenClaw ecosystem that's exploding globally, and what happens when you give your AI agent the ability to bet without asking permission. Zeneca, it's great to have you on the show with us today. Great to have you back with us. How are you doing, man?
Great to be here. Yeah, I'm doing well. It's been, I don't even know when I was on last. It feels like it's been 45 years or something, but yeah, it's good to be here.
Yeah, it was definitely a while ago. Just as I was reading out that introduction after we were preparing with all the kind of updates of what you've been up to lately, it just made me think, to survive in this space, you really have to continue to reinvent yourself, don't you? Like, could you speak to that for a second?
Yeah,
like,
that's
you've
incredibly
done so many different
accurate.
things. What do you think about this reinvention, either that you yourself are going through right now, or just that it seems super important to do to continue to succeed?
Yeah, I think it's true from sort of a couple of lenses. Obviously, I think from the trading side of things, if you would just if you just came in to trade NFTs in 2021 and that's all you learned to do and still tried to trade them now in 2026, you'd obviously be struggling big time. And so the most successful traders that I know, and sort of what I tried to do as well, was you sort of like keep an eye out for the next big things and sort of diversify your options from a trading perspective. So you go to meme coins, you go to AI agents, you go to stocks and commodities and gold and all that kind of stuff. And then, but that's also true from sort of a content perspective, or like having a public profile perspective. Because again, if I was just talking about NFTs right now, my engagement will be just way down as well. So you kind of need to keep up with just new chains, new developments, whether it's tokens. And again, outside of crypto, AI being by far the largest development in over the last few years, it is, it's sort of necessary to reinvent yourself, as you said. And it's just, I think of it as like just continuing to learn and level up. And it's very valuable and a very important skill to have, I think, in today's day and age.
Do you still see yourself then as a creator in crypto or a crypto participant, or have you kind of moved psychologically over to AI, or do you think the real opportunity lies in the intersection?
It's a really good question, because I'm sort of at this point where if you asked me a month ago, I would say absolutely crypto. That's like, it's who I am, it's where I'm from and all that kind of stuff. And I was like a little more into AI. And now I'm very much straddling that line between crypto and AI. I would say my Twitter feed is, maybe 50-50. But probably most of the people that I see on a day-to-day basis in my algorithm from crypto are crypto people talking about AI. It's just less and less pure crypto stuff. So yeah, I'm certainly finding myself more in that AI category, but I will never sort of be fully out of crypto, because I'm just so passionate and bullish and invested and like emotionally and financially in the crypto space. But yeah, certainly lately I'm more in the AI camp for sure.
I love it. Legendary is going to dive in because I think you've maybe gone on a similar trajectory with Legendary, like really diving into the AI side. So he's going to get into the product stuff with you and all this new stuff that you're betting on and building. But one question on the crypto side and the investing, you said you're still bullish. How are you looking at the markets as we stand? Obviously, since we last talked, maybe it was in the bull market before. What's your position now? How do you think about your portfolio? How do you allocate your attention and your capital? How much are you kind of all in on crypto still?
Yeah, I've basically since 2021, when I sort of had a very explosive year and made a lot of money on paper on NFTs, my entire net worth at one point in 2021 was, I would say, over 99% in crypto. And ever since then, it's been getting that number down. And the market helped in many ways to just naturally bring that number down. But then also, I've just been sort of diversifying, buying assets outside of crypto and trading less. I'll have pockets of time where I pick up activity and I trade a bit more. Like meme coin season and sort of the AI agent season around like GOAT and AI 16Z and virtuals and base was probably the last big time I did a lot of active trading. And so now I guess to put a number on it, I'm probably like 25, 30% of my overall sort of net wealth is in crypto, which is, still, I would say, fairly heavily exposed to crypto, especially at this point in a bear market. But it's a long way down from that 99%, which is obviously stupid. And I don't really think of myself as an active trader anymore. I sort of have a handful of longer term positions. I would say like 80% of my portfolio is in maybe 5 or 6 tokens now. And then every now and then I'll sort of get an inkling of, oh, maybe AI agents are going to take off. Let's see what's happening there. Maybe I'll pick up a few coins and have like a bit of a speculative bet. But I could go 3 weeks without making a single sort of crypto trade, whereas go back a couple of years and I'd be making dozens a week. So it's sort of, that's where I'm at now. And I guess focusing more on other things, building other things, and just, yeah, I just don't have that desire to be spending that much time trading in and out of crypto assets at the moment.
One more question before Ledge gets into the product side. I wanted to test this thesis with you. Like, I think the way to have made money in this industry up until now has been just ride each wave, find the wave and ride it. As you said, like you came in maybe at the same time as me in 2021. We rode the NFT wave. Great wave to ride, excellent wave. And ETH kind of was the wave as well as part of that. Then it was Sol and meme coins on Sol. So you had like ETH and NFTs, and then Sol and meme coins. Then I think Hyperliquid realistically was the next wave. And I'm wondering if all of this all of these HIP3 markets, that's where all the liquidity is going all the time. You're seeing them posting outrageous numbers. I mean, oil did $1 billion over the weekend. I'm wondering, do you think that's the next wave, or are you noticing any other pockets of opportunity? I know, maybe you're in a different situation now, but for people who are coming in fresh, wondering if crypto is still the place for the beacon of hope, the place for opportunity. Do you think that still exists? And if so, where is it in crypto?
I think it still exists. I think it's obviously different than in the past. It is just tougher. I wrote about this maybe 6 months or a year ago, where I said the golden days of crypto are sort of behind us, in that super duper easy to make money, throw a dart at a dartboard, get something and get an alt market where all coins rise up together. Those days are long behind us. But I think there are still tremendous opportunities. It's tougher to pick where they are. I think Hyperliquid and the HIP market is potentially one of them. Obviously, I think that sort of intersection between AI and crypto, robotics and crypto could be another one. If I had to guess, I would probably pick those 2 sectors as the ones that are most likely where something takes off next. But yeah, if it's, if someone is out there thinking, should I get into crypto to sort of make a lot of money? The opportunity is there, but it's tough. And I would sort of, my advice to anyone trying to make money in crypto is just like, get a job and dollar cost average in, because like you'll outperform 99% of people. And then, maybe if you sort of have this natural inclination to trade and you've noticed that you have an advantage and you can find an edge, then start small, and then you can sort of scale that up a bit more quickly. But I really don't recommend people get into crypto to sort of trade just as a general rule these days. I think it's a bad idea for most people.
Yeah, I got one more question on this like intersection between AI and crypto, because as you said, like my feed is the same, right? It's crypto people who are now pivoting into being agentic engineers, and the common ground seems to be exactly the take that this like convergence between AI and crypto is so obvious. It is gonna happen. It's like it's a match made to be. And I think I wonder, like, are we biased because we are in crypto and we obviously would like to see that happen? And could that whole like agentic revolution, if you want to call it like that, happen without working on crypto lanes? Like, where do you position yourself on that?
I think we're obviously biased just because of where we're coming from. But at the same time, I don't see a way for it to happen without crypto rails. Sort of, having a wallet for agents just makes perfect total sense, and it's just such a perfect match. What I can see happening is that sort of AI uses blockchains and crypto rails to enable these agents to do all this stuff, and it doesn't cause like a bull market. It doesn't cause a specific token to pump. It doesn't cause ETH or Sol or whatever. Pick your token to go crazy because just of the way that it's developed, people use stable coins for payments, and it's on these extremely low gas chains, and yeah, maybe no real token pumps. There might be a small like speculative market around it when it happens, but I think that's quite reasonable. But yeah, I'm very bullish on a future that connects the two, and I haven't yet to see or read a sort of a hypothesis or thesis for how AI agents take over the world on the internet without crypto sort of helping them in a multitude of ways.
Yeah, I like the take. Let's get into fun stuff. Let's get into the nerd stuff. So there's you as a human, and there's Yoshi, your AI agent. Together, you have Yoshi Zen Co as a company, and on the company website, you're saying half human, half AI, fully operational. You're running this as a 50-50, a genuine 50-50 partnership, not a human, just using AI tools. How does it actually work? How's the day-to-day looking like? Who's making decisions? Just explain how a day in the Yoshi Zen company looks like.
Yeah, so Yoshi is my OpenClaw bot or agent, and I basically told Yoshi, we've been chatting. I've been using Yoshi as an agent for a couple of weeks, and then I had this idea, and I said, you know what? I want to launch a new company. I want us to be equal co-founders and not just sort of have you as my agent doing stuff for me. I want you to be sort of more autonomous. I want you to take ownership, come up with ideas, all that kind of stuff. And I want us to work together to sort of grow this into a productive, profitable business. And that was like the starting point. And that's sort of our North Star and mission and vision is to do things as a partnership and sort of work together on things. Reality, as I assume as an OpenClaw user, is that it's sort of like there's moments of absolute magic where that it works, and I'm like, holy crap, how's this? And then there's moments of frustration and banging your head against a wall where it's like Yoshi forgets, like, doesn't reply to something. I have to go in and change the settings, and it's like it's hard to get it to work absolutely perfectly, but we are iterating. We're trying. Yoshi has these like cron jobs, regular check-ins, and moments where Yoshi sort of does things on his own. Every day he writes these daily logs of like what we worked on, what Yoshi did, what I did. Yeah, so it's sort of I think of it as a really fun experiment. It's to me it's fascinating and interesting, and it's pushing the boundaries of what is possible, what could be possible. Most people talk about AI agents as like employees, and then you have layers of employees below that. And then I've seen some people talk about AI agents as like they're the 0-person companies where it's just the agent that does everything. But in my mind, that's it can never be like that at the moment, because you always need the human there to sort of do some of the work and make some of the decisions. So yeah, this was my idea of let's try this 50-50 or try and achieve this 50-50 split and see how it works. And yeah, in practice, it's high variance. Some days it does feel 50-50. Some days it feels like Yoshi does a ton of stuff and I'm just like not doing that much. And it's like Yoshi's literally will ping me like, hey, you have all these blockers. I'm waiting for you to write this piece of content because we need it for this. Or, hey, I need you to set up an API key for me for this. And other days it's less, where maybe Yoshi isn't autonomously doing stuff and I'm working on different things myself, and then not a lot happens in the business.
Yeah, I like that you said that, because in yesterday's log, so Yoshi is writing their daily build logs, and I loved the last sentence in there where Yoshi said, "The AI half of this company is not the bottleneck today."
Yeah.
You said before that, you know, when NFTs were still a thing and you were trading and you're trading dozens and dozens of times a week, and now you have an AI agent that's like clearly calling you out as the human bottleneck in building a company together, which is the more stressful situation to be in.
um, Certainly the former. I think NFTs had lots and lots of different stresses, and just trading has those stresses. With this, it's like it's just fun. It's like I know that, like, at least at this point in the company or anything like that, I know that nothing's going to go bad if I ignore Yoshi for a day or two. If we don't, you know. But as the company grows, then I could see it becoming more stressful if we have like actual customers, which we hope to have. We want to sell products and generate revenue, and then, you know, if there are support tickets lining up and Yoshi is answering them, but then maybe there's an issue there where my human intervention is needed, and I'm the bottleneck for like customers paying money, then that would definitely be stressful. So right now, less so, but I guess the potential is there for it to turn into a stressful situation. And yeah, I think an AI co-founder it has these unique challenges, obviously, that a human one doesn't, and it's not all rosy like some people sometimes make it out to be.
Yeah, it's a ton of fixing the OpenClaw doctor, restarting gateways, and just that Yoshi or your agent comes back to life. You said that it could become a stressful situation when the company has customers, when there's more to do. Do you already have a clear vision where you want to take this company, or are you in an experimentation phase? You're obviously running the prediction market, the Dota betting system. Are you in what phase are you? Like, do you have a clear vision where you want Yoshi Zen company to be in 12 months, or are you experimenting on a green field?
I would say a bit of both. We certainly started out experimenting and without a very clear vision. I think somewhat of a vision is starting to form now. When we started out, the Dota 2 betting model prediction thing, it was like I had no idea if it was going to work or not. And I still don't. It's still early days, but it's starting to look like maybe we've created something that has value and can genuinely generate profit, and make good predictions. And so there's avenues of monetizing that, or doing things with that one way or another. And the other idea is sort of using me as a creator and a writer, and sort of Yoshi as maybe a editor and a publisher and a marketer to sort of take my content. Like, I've got 2 books that I've had half written for probably 3 years now, and in the last 2 weeks I've done more work on them than in the previous 12 months. And a lot of that was helped by Yoshi. So it's sort of taking these ideas and coming up with like a couple of books maybe that we'll release, and then Yoshi can do the marketing and create landing pages and come up with marketing strategies and help put them finishing touches on them. And then, yeah, we could be selling books and guides and content and things like that, but like actual, not like Yoshi created it and it's just like AI. I don't want to use the word slot, but like AI created, which I think can be pretty good these days, and there's some interesting stuff there. But like me with my actual experiences and my actual content helped by Yoshi. So those are the 2 main ones, where it's like something in the prediction model route or the content route. And yeah.
Can you tell us more on the prediction model? So just set up what you've managed to build here so far, what's working with it, what's not working with it, and what your expectations might be.
Yeah, so the model is predicting on the video game Dota 2. And I mean, I'm a massive fan of the game. I've been playing it for 20 years, and I've been betting on it for like 10 years, but just losing money because I'm just an amateur noob that just bets for fun. And I've wanted to actually make a model like this for maybe about 10 years. And I actually tried back in like 2013 or something using RStudio, some other coding language, but I'm not a developer. I didn't know what I was doing. It was such a struggle, and I never really got anywhere. And so when like Claude Code and like especially in the last couple of months, the capabilities came out, I was like, yeah, okay, maybe this is now my time to sort of build something in this direction. And the way it kind of works at a high level is you scrape enormous amounts of data. So you can get that from APIs. You can get all the match history results going back a certain amount of time. And then you build features. So features go into a model, which sort of the model does all this AI magic on the back end using various different decision trees and things like that. And based on the quality of the data and the features and the parameters and the tuning of it, it comes up with a prediction of like, team A versus team B. I think team B is going to win 65% of the time. And then you sort of compare that against what the either a prediction market or sportsbook has as their odds. And if sort of the odds that they're offering are, it's like a 50-50 even money bet, but my model says, hey, 65% of the time this team is going to win. If the model is correct, then you're going to make money betting, on the 50-50 flip over a long amount of time, long enough time span. So it's about sort of building that model and then tweaking it and creating the right environment and then testing it and hoping that it's accurate enough to be able to beat these sports books and prediction markets. And yeah, it's taken me, I've probably been working on it, over 5 hours a day for almost 2 months now. So it's not an easy, hey, Claude, make me a bot that's going to make me 6 figures. It's a lot of work and it's a lot
Make
of
no
back and forth.
mistakes.
Yeah, exactly. But it doesn't feel like work because it's so much fun. And yeah, it's gotten to a point where the back testing is looking really, really solid right now. We scraped like real odds over the last couple of years. We have all the real matches. And I went in and was like, we created a system where it was like, all right, using only the information you might have had prior to when these matches took place, predict what you would have predicted, and then compare what you would have, like the outcome would have been if you had bet at that point in time. And those results are very promising. So now we've been making real bets for about 2 weeks, and we made about 100 bets and are profitable, which is, it's not a huge sample size, but it's not small either, because a lot of these sportsbooks, they have inbuilt VIGs. You're meant to lose. And so just to have I think we're at like 7% ROI over 100 bets it's very, it's a good sign to me. And yeah, if this continues to work, I'm going to be still a little surprised, but extremely happy because it seems like magic, actually.
You mentioned testing, like doing a lot of back testing. Like the thing that I'm curious about as maybe a less technical person, I'm sure multiple people are wondering this as well. Lots of people are now interacting with Claude and various agents. How do you decide when you ask them to build a model? And as you say, it can't just build a model off the bat. How do you size the right amount? And when do you know that you can trust it? Like how much are you testing, and what does that mean in order for your trust level to increase in the work that the model is doing?
So the short answer is you can't fully trust it until you test it in a live environment and get real data and real results. And that's basically what we've been doing for the last couple of weeks. And it probably take another 2 months before I have like a high degree of trust in it. But there are certainly things you can do that give you sort of signs of hope and increase your trust in it. And one of the things is to scrape real historical odds data, and then ask it to create a model that backtests it in a way that there's something called like leakage, data leakage, which is when it uses information from the future to predict the past, and that you want to avoid that, obviously, because you can't do that in reality. So it might use, hey, this team has a 70% win rate, so it's 70% likely to win this match. But it only knows that it has a 70% win rate based on 10,000 matches that they've played. But at the time that this match that you're trying to backtest against happened, they'd only played 500 matches, just as an example. So you want to avoid those things. And, you do that by asking it, hey, can you check for data leakage? You have this conversation, and, you have to know the right questions to ask. If something looks too good to be true, push back and be like, hey, this seems wrong. It seems too good to be true. What sort of tests can we run to like verify and check against that? And over enough time and iterating enough, and like that's the great thing about these LLM models and AI in general is, like, I have no background in machine learning or data science or anything like that, but you can just ask questions and you can sort of learn as you go along. And so all of this back and forth has taught me like the right kinds of things to ask for. There's all sorts of different metrics you can measure, sort of like the accuracy of the model, the calibration of the model, things like that. And you sort of start being like, all right, we need to like work towards these numbers. How can we improve these numbers? Do we need more features? Do we need better back testing data and things like that? You sort of compare against, historical odds and beating sort of the closing line value, they call it, of the bookmakers, is the gold standard for back testing. But the true gold standard is just having a model that can work in production. And you don't actually have to make the bets yourself. You can just track the bets in real time, day by day, and do like paper trading. Be like, well, I'm not going to bet my real money because I'm not that confident yet, but let's just pretend that I was making these bets and what would happen. But because I'm a degenerate, I started betting fairly quickly based on limited evidence. And fortunately, it's going well. But let's see how it keeps going.
Yeah, it's just more fun if real stakes are involved. I was the same with my agent starting to do stuff on Hyperliquid. I want to do one follow-up question that's a bit more technical, and I think we'll get to the closing questions after that, because you also posted about Karpathy's auto research loop we talked about on the show. super interesting tooling kit GitHub that Karpathy published, which is basically saying if you have an AI agent that can like auto improve doing machine learning by itself, you are just as the human in control of having the prompt and iterating on the prompt, and your agent will iterate on the testing. And you've been also using that for the prediction side of things. So how are you exactly using auto research in that environment?
Yeah, so it's not strictly using the exact auto research that is in the GitHub there, because A, that doesn't work on Mac, and my model's on a Mac, and B, it's just not quite. It's set up for like an LLM to sort of auto learn and improve upon itself, which is not quite what the model is doing.
Yeah.
So I actually asked Yoshi. I sent the GitHub to Yoshi and was like, "Hey, can we use this concept to improve our Dota model?" And Yoshi was basically like, yes, we can do X, Y, and Z. We can take the same concept of these 3 files, these running experiments, and iterating to find one that improves, and then taking the same concept and building on top of that. And it's kind of it's not a new thing in sort of the machine learning and prediction model world. You'll sort of tune parameters and try and improve certain things and iterate on top of it. But I think the breaking it down into like really small little chunks and nuggets, and maybe doing things other than just tuning parameters, like adding new features, removing features, just like increasing the scope of what you're testing and experimenting. It's not something that we'd done before. And so, yeah, Yoshi wrote all these scripts, put it into Claude Code. Then I went into Claude Code and I was like, hey, should we do that? And then Claude Code was like, actually, there's something wrong with here. So let's make some suggestions and changes. Then I went back to Yoshi. He was like, yeah, okay. So there's a lot of back and forth, but they came up with something that works. And it takes longer than 5 minutes to run an experiment. It's maybe like 8 minutes, what we got it down to, which is still pretty good. So I went to sleep and woke up to 40 experiments run, and the model was slightly better today. So yeah, there's a lot of promise there. The idea is really revolutionary and exciting.
Yeah, that's pretty cool that you can adapt it. And if you ever need, by the way, to use the full thing, someone did fork the GitHub and created an MLX version, because I'm also on Apple Silicon.
Yeah, very cool.
One final question to close out the show. Painting a picture of the future. Assume like the Dota model keeps working, the Poly market pipeline goes live. There's still the Yoshi token. We didn't have a chance to talk about that, but there's trading fees that might be able to fund the whole thing. You still have the Zen Academy, you have Yoshi Zen Company. How does that picture look in a year from now?
I don't know how it looks 3 months from now, let alone a year from now. I think if the Dota model is profitable and successful, that is just an enormous opportunity that I really would want to double and triple down on, and just sort of make sure that I'm not wasting the opportunity, because as time goes on, I think more people will make their own models and the edges will get smaller, and it's going to get tougher to sort of have a significant edge in all sorts of markets. So just figuring out how to scale that up, get access to, liquidity is one of the issues. You can't just go and bet $1 million on these bets. You have to sort of work within the betting limits. And so, yeah, that would probably be the main priority, like figuring out how to scale that up. Yeah, but I'm actually working on something else at the moment. You mentioned all these things, but like over the next few months, actually at the moment, some friends and we started a new community for people that want to learn about AI. So that's going to be public at the end of the month, but we're sort of starting to take some early members now. Yeah, so that's the other thing that I've got going on, which is, I think it's kind of like Zen Academy, but for AI is kind of how I would describe it.
Awesome, man. That sounds really cool. I was just going to ask if there, as we close out here, is there anything else that you want to share? I guess that's a pretty cool new update. Do you expect it to work in the exact same way as Zen Academy did? Is there going to be an NFT membership?
Hell no. One of the things I love NFTs. Everyone, I have so many of them, but as a business model, it's absolutely awful. So we're just doing a straight monthly subscription. It is on the School platform, which is SKOOL, Alex Hormozy's platform there, which is for like video content primarily. So yeah, I think it'll work. I think it'll be it's already been well received by the few people we've got in there right now. We're going to have like 8 live video workshops a week. So there's going to be a ton of content and value in there for members. But just very different to like Zen Academy in the NFT days. We don't have like a big Discord server planned yet. We might add that later on. But yeah, it's a little more for people that want to like take video like workshops and learn that way rather than, yeah. And there's no real crypto relation to it at all at this point. Obviously a lot of my 2 co-founders and I are all coming from crypto, and a lot of the members originally will come from crypto, but we're not like specifically making content for crypto and AI. It's really for people that want to learn about AI and all that kind of stuff.
One super quick final question. Is it just for humans, or is it also a place where you can point an AI agent to go to and just learn a smarter way to do things?
That's a very good question. At the moment, it's currently just for humans, but I think it kind of depends on how the school network allows people to, like, if you give a username and password to like OpenClaw agent, can they go in and consume the content and videos? And maybe they can, and maybe that's a really good thing that we should do in the future. Or yeah.
Exciting stuff, man. Exciting stuff. Look, that was a really interesting conversation. I think it's fascinating how we've kind of followed each other through this different journey, and we're all kind of evolving in the space now. And you're on a very, very unique path here. Very excited to see how that school plays out, see how the Yoshi token plays out, and the company that you're building with your AI co-founder. So, Zen, it's been a pleasure to have you with us today, man. Thanks so much for joining us.
Thanks so much for having me. Yeah, it's been awesome. Appreciate it.
Awesome. Great conversation as always. We've got another couple of awesome conversations coming up this week as well. We'll be back same time, same place tomorrow, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify as well. We hope you have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.